The Leave bandwagon is rolling, and sterling is coming under pressure from the prospect of Brexit. But what about the euro? If Brexit really does happen, what effect will it have on the Eurozone's currency? Well, with me to discuss these issues is Jane Foley, G10FX strategist at Rabobank. Jane, first of all, we should talk about sterling. It's the polls are really now having a kind of a big weighing effect on it.
They really are. In fact, if we look just from the beginning of this month, we see it's cable down over 4% already. Now, it's not quite at the year's lows, but I think right now any movement in sterling is very much being directed by what the opinion polls are saying.
And our chart also compares sterling against the dollar with the euro against the dollar, which hasn't had that kind of similar effect. It's been affected by other factors.
Well, this is right, because if you imagine if there were to be a Brexit, I think immediately focus would turn upon the wider euro area, and of course the impact both economically and politically of a Brexit. Now, if we consider sentiment within the European Union towards the political situation in Brussels, we see a lot of disharmony. In fact, some opinion polls are suggesting that there are more people in France who are unhappy with Brussels than there are in the UK. So the implication would be, does a Brexit increase those cracks already clear within the European Union?
And across Europe, one place we should be looking at is Switzerland and the Swiss franc, and our second chart shows that's starting to have that effect. Lots of haven support for the Swiss franc.
Well, that's right. Of course, we've got to remember that Switzerland is not in the EU. And of course, not only that, but the Swiss franc is a typical safe haven currency. Its fundamentals are very good. So from that point of view, we tend to have a lot of money moving back into the Swiss francs when there are times of political anxiety. Now, the Swiss franc has been a very overvalued currency for many years, related, of course, to the crisis in the Eurozone, the political disharmony in Greece, etc. And right now, again, we see the Swiss franc gaining ground, obviously against sterling, but also against the euro too, as investors push into safe havens.
Right. Well, some people think that the euro is a haven. You're not so sure about that, and our third chart illustrates this.
Well, it does. Now, yet last year, I would say certainly the euro was exhibiting safe haven behaviour. But what this chart shows is positioning, specifically speculators' positions. And of course, what we saw really at the beginning of last year was a massive build-up of euro shorts. Now, that really built up during the second half of 2014 into early 2015. And most of last year, what we saw was speculators correcting those shorts, short covering. And I would say a lot of the behaviour that we saw in the euro last year was actually short covering. And I would also say, if the euro was a true safe haven currency, why was the Swiss franc so strong against the euro? So now that we have this correction that's taken place, the levels of shorts in the euro are more normal, more typical of what you might expect. I think the euro might be more exposed to negative news, to people again building these short positions.
9 days to go. If we still see these polls favouring leave, your expectations, therefore, for sterling are what, and for euro are what?
I think if we did see a Brexit, I think cable could fall towards something like 126. I think we could go up to 86 on euro sterling, and I would expect to see the Swiss franc gain against the euro. I'd also expect to see the Japanese yen rally quite hard. It is beginning to rally already, and that again is a reflection of safe haven inflow.
Meanwhile, vulnerability of the euro, people's confidence in the Eurozone project is going to start diminishing if Brexit happens.
That could be the real legacy of a Brexit.
Jane, thank you very much.